Okay, this is problem 1311B, and I'm going to focus on the investing section and then a little bit on the non-cash investing and financing. So you've done the current accounts and all that good stuff, and we're doing the land, buildings, and equipment. So it says the land sold for cash at cost. That means no gains or losses on that transaction. It went from 150 to 110, so that means that we sold the land for $40,000. We go down to investing and say we sold land, and it was for $40,000. Okay. The next thing that we come into in the notes is that depreciation expense for the year was $55,000. So we know that goes in the operating section because it's an income statement account. 55, whoop, in the wrong spot. 55,000. Okay, now the problem is we've got buildings and equipment, and the 55 goes with both of them. And so we have to figure out how much is each. So we have to look a little bit further down here, and it says, oh, we sold some equipment and some additional equipment was purchased, but nothing happened to the building. The building stayed the same. So we know that any change from the beginning accumulated depreciation to the ending on the building all goes with the building because nothing was sold. So we can assume that of this 55, 20,000 goes with the building and the rest goes with the equipment. Okay? All right. I mean, you could just check both beginning and ending balances of the accumulated depreciation too, but you know, it's whatever works. Okay, now we come down to the sale of property, plant, and equipment. Well, first of all, it says we purchased some additional equipment for cash. We'll do the easy one first. Okay, we bought $80,000 worth of equipment, and we say we purchased equipment. Okay, so 80, and it makes sense that to do that used up some cash. Okay, now it says the cash received for equipment sold. Okay, so here we're just kind of creating the journal entry. We received cash proceeds of $37,000. The original cost of the equipment that would come off the books would be $33,000. And then it says the book value. I'm sorry, I'm picking up wrong numbers here all over the place. The original cost of the equipment was $40,000. And so we're missing accumulated depreciation and either a gain or a loss. It tells us the book value was $33,000. So that means if the equipment cost $40,000 minus the accumulated depreciation gives us the book value of $33,000. Which means it had accumulated depreciation of $7,000. And then the difference there is going to be a gain or a loss on the transaction, which comes out to a gain of $4,000. Then we post this. So we say we sold equipment, and the proceeds goes here. That's the $37,000. The accumulated depreciation, that goes, and that we have to make sure that it's on the equipment, is 7. So now when we add this across, it should go 42 plus this minus this, gives you that. And let's see, this is a gain on the transaction. That goes in the operating section since it is an income statement account. And that is a credit of $4,000. And the equipment comes off at $40,000. So now, just doing a double check, when we add these and subtract these all across, they should add up. Now the only other goofy thing on this worksheet is you'll notice when you go through to check the rest of the accounts, in the top section, you've got bonds payable that went from $265 to $235. and you've got common stock that went from 250 to 280. In the notes, it says we issued 30,000 shares of $1 par stock to convert bonds payable at face value for 25,000. So when we make those adjustments in the top section, and I haven't got room to write it out here, but you would make a debit to the bonds payable for it should be, yeah, it should be 30,000. Okay, for 30,000, and a credit to the stock, common stock, for 30,000. So you'll notice that both of those, you would sort of put an asterisk by this if you were, doing it on a worksheet, and just to indicate that these are non-cash investing and financing transactions, and these would be shown at the very bottom of the statement of cash flows when you do the actual statement. But you notice that there's no statement of cash flow effects. That's all the bottom part of the worksheet. When you have a non-cash transaction, both sides of the adjustment are in the top section. Okay? So that's your problem 1311B.